everybody, it's Mortgage Rob with Invis. How are you today? It's January 18th and I thought I'd talk a little bit today about the changes that were announced yesterday by Minister Flaherty, our finance minister, in regards to the high ratio financing and some of the changes that are coming forward. As always, you know, the headlines comes out, there's quite a bit of panic. I think the intention of the changes were to keep the mortgage market or the household market in Canada in check, and in you know, most of the cases I think that the changes were quite prudent. Just to sum up, there was three changes. The first change was that going forward, the CMHC is going to remove the option to take a 35-year amortization and reduce it down to 30 years. The other change was that when you're refinancing your existing mortgage, and make this clear, it was for refinancing your existing mortgage, you can only go to 85% of the value of the home as opposed to 90% in the past. And then the government is also going to be removing their insurance on any home equity line of credit products going forward. So the effects are taking March 18th, so you still got a little bit of time to get under the umbrella, but one by one I'll just chat about them a little bit. First of all, the reduction in 35-year amortization down to 30, not a big deal. What you would see on a $300,000 mortgage at today's 5-year fixed rates, you're looking about a $100 decrease in the monthly payment. What that really translates into is about $3,000 to $4,000 worth of income. Really what I think this is going to affect, it's going to be a little tough on the first-time homebuyer that's trying to, you know, squeeze every dollar that they have to buy, you know, the biggest first condo or first townhouse or home that they can buy. So, you know, it will create a little bit of a challenge, but there's many other ways how you can actually qualify for more based on your credit history, based on, you know, different sources of income that you had. So, not a huge issue. The second change was the reduction of the refinance limit to 85% of the value of the home. I think that's a prudent move by the Bank of Canada. I don't have too many clients that are looking to go to 90% of the value of the house. One of the things that you might see, or that we've seen in the past, is that home prices were going up so quickly that if you went to a refinance of 90%, you know, within 6 months or a year, you still had very good home equity. What we're going to expect is that we're going to see more stable growth, possibly a decrease in values over the next, you know, 12 to 18 months. So this is just kind of a balance to make sure that Canadians are increasing the equity in their homes. The third change was the HELOC products, and this was probably the biggest area of concern for the government. Home equity lines of credit were being used for things that they weren't planning on, where it was to buy a car, it was to buy big screen TVs, it was to buy more luxury items, as opposed to, you know, used to consolidate debt, which was one of the big ones. So generally what was happening is that Canadians' equity positions in their homes on average was starting to decrease. So it was pretty much a prudent move, and again, not an overly popular product when you're talking about high ratio. What we won't know is how the banks will follow suit on conventional financing. Many of the banks will insure their portfolios even on a conventional basis after or post-funding, or, you know, quarterly or annually, and if they've got HELOC products in their conventional portfolio, will that be enough that will there be risk there that they're going to want to maybe change their policies on how they underwrite? In most cases, the banks are pretty diligent about underwriting products that have a HELOC attached to them, so I'm not expecting a whole lot of issues. So overall, I mean, it was just you know, a move by the Bank of Canada. I don't expect it to be a big issue. You know, I really expect that it shouldn't affect the market overall. If you do want to get in under the wire of one of those terms, you got till March 18th on the amortization limit, as well as the refi limit, and you've got till April 18th on the HELOC. So hope that answers some questions and sheds a little bit of light on the recent changes for you. If you need any assistance, or, you know, want to discuss a little bit further, you can always reach me at 778-686-8326. Take care.